U.S. stocks surged in today's session as markets rallied on renewed hopes the Federal Reserve will cut interest rates in December. The Dow Jones Industrial Average jumped roughly 575 points, about plus 1.2%. The S&P 500 rose around 0.7%, and the Nasdaq edged up close to 0.3%. A key driver, falling yields. The 10-year Treasury yield dipped to about 4%, easing borrowing costs and boosting investor confidence in risk assets. Adding fuel to the rally, several top Fed officials, including Gov. Christopher Waller and San Francisco Fed President Mary Daly, publicly backed a rate cut at the December FOMC meeting. That pushed the probability of a cut to as high as 85%, up sharply from just a week ago. Tech, and especially AI-related stocks, led the charge. After Alphabet, GOOGL, unveiled its new Gemini 3 AI platform on Nav. 18. Shares of AI chip and infrastructure names, including Broadcom AVGO, Micron Technology MU, and Advanced Micro Devices AMD, surged 11.1%, 8%, and 5.5% respectively. Overall market breadth was strong. On the NYSE, advancers outpaced decliners by more than 2-to-1. The Nasdaq showed a similar ratio. The CBOE Volatility Index, VIX, Wall Street's fear gauge, dropped to 20.52, down about 12.4%. What this means for investors. Rate cut expectations fueling optimism. With Fed officials publicly leaning toward easing, many investors are rotating back into risk, especially growth and tech names, which tend to benefit from lower interest rates. AI infrastructure leading the charge. The recent surge in AI chip and infrastructure stocks suggests investors are placing big bets on AI-driven growth continuing into 2026, especially after strong responses to launches like Gemini 3. Broader bullish sentiment, but caution is still warranted. The decline in VIX shows the market feels more confident. Still, this rally rests heavily on rate cut hopes. If economic data or Fed communication changes, volatility could return quickly. Potential opportunities in rotation. With strong performance from tech, some investors may begin rotating into high-quality value names, financials, or other sectors if they believe growth valuations have gotten ahead of themselves. Bottom line, the tape is flashing green for now. If the Fed does cut rates in December, that could further reinforce investor appetite for growth and tech. For long-term investors, now may be a good time to check allocations. Consider increasing exposure to high-growth, AI-driven stocks, but don't ignore interest rate sensitivity or the potential for a rotation into more conservative sectors. U.S. stocks surged in today's session as markets rallied.